Get ready for the action, because we are kicking things off with major shifts in the AI cloud landscape. We are diving straight into the news as CoreWeave shares dropped in pre-market trade after Google and Blackstone announced a massive new AI cloud project. This development has sent shockwaves through the sector, and we break down exactly what this means for the future of AI infrastructure and why this partnership is causing so much volatility in the market. Changing the game, and how this new agentic technology is set to integrate deeply into your daily work across Gmail, Docs, and more. And finally, we close with how established players are responding to this wave of AI integration. We examine Genpact's expanded Google Cloud AI alliance and their strong first quarter results, and how this strategic move is changing the narrative for their business. Stick with us because we are tracking every move in the AI world, so don't miss out on the next big story. CoreWeave shares experienced a significant drop in pre-market trading on Tuesday following announcements from Google and Blackstone regarding a joint initiative to establish a new AI cloud infrastructure. The movement weighed heavily on the AI cloud firm, which has been under scrutiny due to its aggressive spending and rapid expansion plans. CoreWeave shares fell 3.3%, trading at $103.77 before the market opened, with Nebius shares also declining, while Alphabet saw a slight gain and Blackstone slipped. The catalyst for the stock movement stems from a shared focus on the tight supply of AI computing resources. Google and Blackstone are reportedly collaborating on a U.S. project aimed at supplying data center capacity alongside Google's custom AI chips, the Tensor Processing Units, or TPUs. Reuters indicated that Blackstone intends to inject $5 billion upfront to bring 500 megawatts of data centers online by 2027. CoreWeave operates by leasing NVIDIA GPUs and faces concerns not only about current supply, but also about potential price suppression in future AI infrastructure deals by major tech firms and investors. While Bernstein analyst Madison Rizzi suggested Google Cloud's initial venture might not immediately impact CoreWeave significantly, she noted it signals the start of a more earnest hyperscale attack, potentially pressuring CoreWeave's pricing and margins. Blackstone's new venture plans to offer data center capacity, operational services, and supply Google Cloud TPUs as a compute-as-a-service offering, providing organizations with rental access to accelerated computing power. Despite the market headwinds, CoreWeave announced fresh financing on Monday, securing a $3.1 billion delayed draw term loan facility, which provides funding for infrastructure tied to existing customer contracts, signaling growing institutional confidence in the company's execution. Financial performance remains a key factor. CoreWeave reported first-quarter revenue of $2.08 billion, up significantly from $982 million a year prior, though the period resulted in a net loss of $740 million. The company maintains a substantial revenue backlog of $99.4 billion and has passed 1 gigawatt of active power consumption. CEO Michael Intrater characterized the quarter as the company's strongest bookings quarter, highlighting a target of over 8 gigawatts of capacity by 2030. The central tension for investors remains the balance between surging demand for AI infrastructure and the cost of building it. The per-market decline suggests investor focus has shifted from the sheer size of the market to the competitive landscape and the potential cost structure of AI compute. CoreWeave is scheduled to present to investors on Tuesday to address these critical questions regarding funding, demand, and competitive positioning. CoreWeave stock experienced a significant downturn, falling 4.3% in early trading, following the announcement of a major artificial intelligence cloud infrastructure partnership between Google and Blackstone. Investors reacted negatively, perceiving the deal as a potential competitive threat to the rapidly growing neocloud sector. The joint venture is set to focus on delivering AI cloud services powered by Google's Tensor Processing Units, or TPUs. Backed initially by a $5 billion equity commitment from Blackstone, the new company aims to bring 500 megawatts of AI cloud capacity online by 2027, with plans for further scaling. Google will supply TPUs, software, and cloud services, offering customers an alternative access point to Google's AI computing infrastructure outside of Google Cloud. The venture will be led by Google executive Benjamin Traynor-Sloss and will concentrate on compute-as-a-service offerings built around Google's custom AI chips. The announcement intensified scrutiny on CoreWeave, especially following NVIDIA's decision earlier in the year to nearly double its stake in the company, now owning approximately 47.2 million shares, representing about 11% of CoreWeave, and valued near $4.9 billion. While Blackstone president and COO John Gray framed the partnership as a generational opportunity for building AI infrastructure, Wall Street immediately questioned how increased competition would impact CoreWeave's GPU-as-a-service model. Bernstein analyst Madison Rizzi offered a nuanced view, suggesting the immediate threat to CoreWeave's scale is limited, noting that the 500-megawatt capacity is small compared to the company's projected expansion for the following year, and it is not immediately problematic. However, Rizzi cautioned that this deal signals the start of a more substantial hyperscale market challenge. Analysts believe the combined Google and Blackstone operation could gain advantages in areas such as capital costs, long-term margin potential, and power access. CoreWeave has demonstrated strong underlying demand, reporting first quarter 2026 revenue of $2.1 billion and a revenue backlog of approximately $99.4 billion as of March 31, underscoring the intense competition emerging in the AI cloud infrastructure market. Google has launched Gemini Spark, a 24/7 cloud-based personal AI agent, marking a significant shift toward always-on agentic AI. Announced at I/O 2026, the agent leverages the new Gemini 3.5 and Gemini 3.5 Flash model family to power these features, which are being rolled out for workspace and enterprise customers via Google Cloud. Reporting from Mashable indicates that a beta version of Gemini Spark will be accessible to Google AI Ultra subscribers next week. The functionality of Gemini Spark is highlighted by The Verge, which details its capability to access personal data across Google services, including Gmail, Docs, Photos, and Drive, through an opt-in menu, enabling features like deep research to pull information from these sources. This launch underscores a major industry trend: the move from reactive chatbots to persistent, action-oriented agents. Industry analysis suggests that while Google's advantage lies in its deep integration with existing Google product surfaces, the engineering focus is shifting toward managing the operational complexities of these systems. Building such always-on agents at scale necessitates robust event ingestion pipelines, real-time state management, and careful handling of authorization, consent workflows, and data governance. Practitioners are advised to focus on the trade-offs between automation value and the associated operational and privacy costs. Key areas for scrutiny include the user experience of the opt-in mechanisms, the scope of third-party integrations, and security controls around background access to sensitive data like Gmail and Drive. Google Cloud has also introduced documentation for the Managed Agents API and Agent Platform, providing resources for developers building and securing these next-generation agentic systems. Genpact is recalibrating its investment narrative following an expanded alliance with Google Cloud and strong first-quarter results, signaling a strategic pivot from traditional business process outsourcing, BPO, toward higher-value, AI-driven finance solutions. Analysts suggest that this shift, reinforced by the Google Cloud partnership, could offset slower core growth and competitive pressures. Key to this strategy is the company's ability to monetize heavy AI investments effectively while managing client spending caution and the challenges associated with performance risk in outcome-based models. Management's 2026 guidance provides a clearer execution benchmark, projecting at least 7% net revenue growth and an 11.1% net income margin, alongside continued share buybacks. These forward-looking statements, combined with stronger Q1 2026 sales and net income figures, position the company's AI partnership against market expectations. Genpact projects reaching $6.3 billion in revenue and $730.9 million in earnings by 2029, necessitating a 7.6% yearly revenue growth rate. This forecast suggests a significant potential upside, with some estimates pointing toward a fair value of $47.73, representing a 52% increase from current trading levels. While the AI push is promising, investors must remain cognizant of execution risks. The success of the strategy hinges on Genpact's ability to navigate delivery risks inherent in outcome-based models and successfully translate AI investment into attractive margins. Genpact operates across business process outsourcing and information technology services throughout India, Asia, North and Latin America, and Europe. The company maintains a flawless balance sheet and is currently viewed as undervalued by some analysts.